precious Master, our God and our Father, we approach your throne of grace this morning with thanksgiving in our hearts, acknowledging your sovereignty and your power in our lives. You have been so faithful, our God. You have brought us this far. And as we come, Lord, to receive our Q1 performance, we want to invite your Holy Spirit to come and guide our discussions. Lord, we want to pray for everybody present here and even those that are following us virtually. The Lord, you are going to join us with one spirit. May your presence be in our midst, guide us and bless us. For this we pray through faith in the name of God the Father, the Son, and the Holy Spirit.
Let's appreciate Reverend Evans. Thank you. So we invite you to our Q1 2025 Equity Group Holdings PLC financial results. The results are also being streamed live on our social media platforms. And for those who are following us online, any question that you might have, kindly raise it on the platform. We'll be able to respond to you. But allow me at this time to invite the Group Managing Director and CEO, Dr. James Mwangi, to take us through the Q1 2025 results. Dr. Mwangi.
Thank you very much, Alex. And following cue from Alex, I want to extend a very warm welcome to you this morning. And thank you most sincerely for joining us as we celebrate the results of our first quarter, January to March 2025. Without much ado, let me go straight to the results. We'll take a few slides so that you could really appreciate the results. And the first one is really to contextualize the environment under which we are operating, the environment under which these results have been achieved. When we scan the global environment, we see a lot of uncertainty. Geopolitics is a big issue globally. The issue of tariffs have really deepened that uncertainty, but awkwardly also introduced mistrust. There's too much mistrust, and you wonder how we'll be able to soldier together. But amidst all this, we see East Africa maybe suffering the least pain of the tariffs, only 10%. So it might have positioned as globally competitive. When you compare the countries that East Africa region will be competing with, if we talk of the Indonesia coming all the way to Sri Lanka, coming to the countries that we would compete with on textiles, they are on a tariff band of 30 to 45. So essentially that makes the East African region better positioned from an export competitiveness. We also see a very strong Sub-Saharan Africa outlook. The East and Central Africa, as part of the Sub-Sahara, is the fastest growing region of Sub-Sahara, but also visibly one of the fastest growing regions in the world. So it has attracted attention, and there is quite a lot of debate as to whether this region will become the Southeast Asia of 30 years ago, which we all understand. And a deep dive suggests that is possible because that rapid growth is underpinned by massive infrastructure investment. Yesterday, today, we are waking up to Lironi Mau Summit infrastructure. That will be an infrastructure of its own kind in the region. And all that would have very significant impact. But also, we can't underestimate the challenge of the US aid cut, US aid and all that, the region was one of the largest beneficiaries. Somali, Kenya, DRC, and other countries around here, they were in the top 10 recipients of USAID grant and support. So withdrawal of that poses a significant fiscal risk, because the governments must step up to fill the void, because it was on essential support. It was primarily in health. It was in agriculture. It was in social payments. So it's not something we can wish away and needs to be funded, and that can really cause a physical challenge. And the last one is to see the better positioning of the region because of a very diversified sectoral contribution. If you look at Kenya, 6 sectors broadly make the economy. So it's not a single one commodity region. We have a basket of commodities that gives the diversification that mitigates sector or product risk. And when you also do the macro story, looks like we have a supportive global monetary environment. We see a weakening dollar that is good for the region. A possibility of interest rates continuing to be cut. The lower interest rates are good for the region. So there's quite a bit that one would see a long runway and a high headroom of wealth creation opportunities. And you manage the present shocks and tides, but also tap to the tailwind that hopefully will help. Going to the next slide and moving from global to the dynamics in these economies and taking specific ones, I would like just to draw you to the bar graphs on the GDP growth rate. And just compare Rwanda above 7, Uganda approaching 7, Tanzania above 6, Kenya approximately 5, DRC approximately 5, and that compares very positively to the 4% for sub-Saharan Africa and 3% for the global economy. So we are outperforming the global economy at least 2.5 times, and we are outperforming sub-Saharan Africa. They always say when the tide lies, all the boats, water lies. So it's a good environment to be operating in, and we see each of the country that we operate in is positioning itself to be the winner. All of them are angling to have a program with IMF, and we know what that brings discipline within government. So we're excited that most of the countries. But the most remarkable one is that all the countries have managed to manage their inflation. So inflation is not a big challenge. And hopefully we should be able to see stability within the region. So from the highs of 20 that we were seeing, we're tending towards within the predicted or projected inflation rate. So it becomes a predictable environment to operate in because of stability in macroeconomic environment. Going to slide 3, and when you then compare, not this time countries, but regions, look at where we are as a region. And that supports what I had earlier Lon said. We pass as the fastest growing region in the world. And when you are the fastest growing region, and people can see this can be long-term growth because it's infrastructure-led, it is population growth-led, it's increasing GDP per capita, it's agriculture with significant opportunity to address global food insecurity, strategic green mills. You can say Equity wouldn't have been in a better place. And those who understand equity then see how strategically equity is, given that in all these countries that we talked, one slide back, Alex, in all these countries that we talked about, Rwanda, we are the second largest bank there. Uganda, we are the fourth largest bank. Kenya, number 2 largest bank. DRC, second largest bank. We are systemic in the entire market, in the entire region. And that is what positions us. And we will have failed if we don't make it an equity movement. Everything we are doing to make this an equity movement. And if we move on to the next slide, Alex, and we will see what we were saying, Lydie, whether you look at the debt ratios, yes, the monetary policies, the inflation, the exchange rates, they are fairly stable. It's not something that one would say is a big challenge. The tides are manageable. This is the economic ocean, but a good captain should be able to steer and navigate their ship comfortably because the tides are not that high. There is calmness in the economic environment that we are operating on. If we will move to the next slide, this is a very important slide. Kenya is the home of equity, the headquarters of equity. So we orchestrate from Kenya. But look at the trade pattern for Kenya with the neighboring countries where we are systemic in size. It's growing, and particularly we are excited that the fastest growth is with the DRC because DRC potential is fairly significant, that ability. And I want to give it to our team led by Joy, who have really focused on facilitating growth of cross-border trade through trade missions, and we can now see it is paying. That trade mission positions us, and it reflects very well when you look at trade finance. It's our fastest growing sector is trade finance. So it is not just rapidly growing economies, but it's rapidly growing economies that are significantly integrating and trading more with each other. So it's the most integrated region in Africa, but more importantly for the bank purposes, it's the region that is trading most with each other. So it's following what we saw in Asia. They are now above 45. It's following what happened in Europe. It's close to 70% regional trade that you are trading with each other. That is very relevant in this era of tariffs because it's unlikely you are in a single trading block, so you could be able to avoid that level of trade hostilities. So the last slide on environment is what we said, how well are we positioned? We're not just number 2, but we are a significant number 2. In Kenya, we'll be 1.5 times bigger than number 3. In DRC, will be 2.5 times bigger than number 3. And in Rwanda, will be 1.5 times bigger than number 3. So it is a systemic position that differentiates us and gives us visibility to be the bank to go to. If you look at that slide, there is no other bank that has that capability. It may be bigger than us in one market, but that's the only place it's bigger than us. So as we take a position that is more regional other than country-centric, and that's why we are very successful in trade. Alex, so broadly that's the environment, and the conversation will not be what we have done in that environment. It's what we should do in that environment. So later on, we have set a question we want to answer. What is the opportunity gap? What is the opportunity? And that's what we are focusing on. How do we unlock this potential? How do we take a disproportionate share of the opportunity, bigger than anybody else? And that's then sets us to the issue of transforming ourselves. We will not be able to position ourselves to disproportionately capture that market share, increase our market share, unless we transform ourselves. As I said, we are hoping, and it's not hoping, we are angling to be the HSBC of Southeast Asia. Southeast Asia would build HSBC. The East and Central Africa region will build the equity of East and Central Africa. And that is what, and it's really about strategy. If you look, well, most of you have been talking about Africa Recovery and the Syrian Plan. The Africa Recovery and the Syrian Plan is the development plan for that entire region. And we have made it our plan. We have given it to the region, but it's being implemented by the private sector on our rails. We have seeded that implementation with the $7 billion. We have sought partnerships with the development banks of $24 billion. But the orchestration is on the rails of equity. It will be on the balance sheet of Equity Bank. So that is how we have positioned ourselves. So as that growth is realized. The second one is on strategy, is we have pushed the brand to become a global brand. Because you can have the capability, but if people can't see you, then they don't use your capability. But if you are the strongest brand, not just by valuation, but also by ranking, nobody misses you. You're the biggest billboard in the region. Whoever comes to invest, we hope they naturally take Equity to be their partner. Development partners who want to play a role, as we have seen with the development banks. What are we building and struggling with is we're coming from a microfinance bank. How now our balance sheet is a $15 billion balance sheet. That is not a microfinance bank. That's not a retail bank. That's a universal bank with muscles. How do you change the culture such that we don't walk like a microfinance bank, we don't behave like a microfinance bank, but we behave as the Bank of East and Central Africa, the big balance sheet bank that can fund infrastructure so that customers can. How do we upskill our people so that they can process LCs, guarantees, trade finance instruments, process big loans? So the issue of recalibrating our human capability, and we'll talk about it later. I know you have a question there. We'll try and answer that question. And the last one is the business model. The business model that brought us this far, it's perfect, but we must enhance it to be a development model, not for those at the bottom of the pyramid, but to support SMEs and to support corporates that are then doing the heavyweight lifting. And you see that has played heavily. The strategy is about human capability. The customers. The customers are now, we are the most inclusive bank, maybe on earth. Micro, small, medium, corporate, high net worth, families, and individuals. The product range must be improved, and that's what we have been working on. We are in a region. Do we need to have each bank be a standalone? And the answer is no. We can enjoy the economies of scale if we centralized most of our operations and shared services. Customer experience is what will determine the winners and the losers. How do we enhance our capability on customer experience? And we have talked a lot about organization culture and people. How do we attract the best? And this time, not necessarily from the region, but globally, because it is a region heavily integrating with the global economy. So how do we bring global skills to help that interconnectedness? When the global investors come to the region, because it's the most attractive region with a long range of value creation, how do we serve them? So to be able to do that, and I take a lot of pride that our shareholders have said, use this 5% free rider shareholding. Build an employee share ownership scheme and give it free to your staff so that you attract the best and they take a long-term view. So the pension, take a view of a 20% monthly salary contribution to pension so that people, you don't take care of people today, but you also take care of them at old age. Pensions that could allow them to live the same quality of life in retirement. If you save 20% of your salary monthly and you have no access to it, then your old age is well taken care of. And that's medical. Develop your own medical capability that can guarantee your staff high quality, accessible, and affordable health, including your customers. So Equity Afia comes in. And then a globally competitive group life that gives people certainty about the dependence in the unlikely event that there is loss. But the bigger one is performance. How do you measure performance? How do you reward performance? And how do you compensate performance? And how do you hold people to high standards of delivery? You don't attract people and then you pay them well and do everything. So that again is a big process we are going through. Systems and process, and I'm really happy to, and I'm sure each of you is a witness that instability on our system is something of the past. They are stable, they are fireable, they are reliable. So almost complete, but you never complete investment. You are ever investing in systems, but we are in a good place with systems. Channels, we have the best channels you could ever think about, and our digital investment ranks as very high, but cannot naturally improve. And we are aiming to be at a level of a global leader in terms of digital assets, so that to match the expectations and the needs of a digital population, the Gen Zs and the youthful population. So we are aligning ourselves to be. So this is what we have been going through. And if I turned the page with the support of Alex, you could see how much work has been done. The transformation of equity. So when you sense, for instance, staff, that's what we are going through. How do you create a high performance management environment? How do you deal with consequence management? So friction and noise would come from the systems. Don't make noise. You only feel them from instability. But human beings, you'll find differences in opinion. But that is simply because we are going through change. Not everybody embraces change, and we'll go down through. So that's how we have been positioning ourselves. Investors don't invest for the past. They invest for the future. So we have a very promising future, but an equally very promising repositioning. We have repositioned ourselves through this transformation. And I like our present. I admire our past, but I'm a believer in our future. That's what really we should really focus on. Going on, now let's look at numbers. That's the past. It's last year, or first quarter. But I'm more eager not to present this quarter, last quarter, but to present 2030. I'm starting to imagine how would 2030 look like if we have positioned ourselves this way and the environment is this promising. That is a debate that we are obsessed about. But because we have to live in the present, let's go through the numbers. So from the banking point of view, and as you can see, we have given the MD of Kenya a seat on the top table. Moses, you wave. So we are talking about Moses here. And Moses has shown remarkable improvements. We are seeing that he's now been able to stabilize the ship. We're starting to see, if you look at loan deposit ratio, he has started releasing money. His customer deposits have started to grow, and he has maintained a fairly stable loan coverage, but he's under pressure when it comes to performance. Turning to the P&L, which is always of great interest, we start seeing revenue in Kenya increasing by 19%. And you can see, when we recruited or invited Moses, who was our chief finance officer, and said, no, Moses, I think you can do better in Kenya. I was on this podium when I said the problem of Kenya is efficiency. And we need somebody, an MD of Pricewaterhouse, to go and build that efficiency. We have seen the balance sheet has not grown much, but look at the efficiency. Revenue on the same asset has grown 19%. And you can still start seeing efficiency, whether he maintains yields. But look at what he's doing to his cost. The costs have moved from 6.1, or cost of funds, to 4.6. And of course, the consequence is that his cost-income ratio has started to drop and drop quite fast. With one item only, cost of funds, he's down at 50. Look at what has happened to his profitability. His profitability has gone up by 50%. His first quarter. Have the right person with the right skills, you do the right thing, and you get the right result. So we're starting to see Kenya bounce back, and we'll see that thread throughout, and we have learned quite a lot. But to the shareholders who might be in the room, look at return on equity from 21 to 26 in just one quarter. Return on equity from 2.2 to 3.4. He's taking us to the old good days of equity when it was galloping. This is only on efficiency. One item, cost of funds. When he brings efficiency on earnings and then scale through growth, then the story of Kenya would be an interesting story. If I were you, I would take a bet on it. DLC, Equity BCDC, learning very fast to catch up with Kenya. We are wishing them all the very best. They have sustained growth despite people asking, and I have emphasized on this. And the MD of DLC, Willie, I brought him so that he can answer the questions. Look at it. Amidst all the concerns you have of DLC, conflict, look at customer loans, 9%, customer deposits, 9%, loan to deposit ratio, he has been able to move from 50% to 53%. You know, he's leading. Amidst all these, he's leading. And when you look at his asset quality, it's fairly stable if you look at it from a long-term view. At this time, last year, it was 8.7. It's 8.9. There isn't a huge deterioration in terms of loans. So the SHIP, the second largest bank in DLC, is stable. It's continuing. Equity will never take the umbrella away from you when it is raining. We have continued to give businesses loans because we believe in long-term stability of DLC. And that's why you see the loan. But you need courageous people to be able to do that, maintain the ship. When you look at profit, Alex, next slide, yields on assets, stable, cost of funds picked up a little bit, net interest margin, cost of course gone up because you're operating in a challenging environment. But if you look at return, slightly affected, but the balance sheet is stable. Cost is recurrent, it's during the year. Once the friction, the conflict in the country ends, we'll go back to operating normal cost. And so we are very happy that the machine is what it is. Going to the next Uganda. He has not earned himself a seat here, but Gift, when we use it on the podium, Gift is here with us, and we can see he's struggling with loans, down 11%, not because he doesn't have deposits, but because he has really focused on cleaning up the loan book. And we see Gift this time, last year, he inherited a loan book NPL of 21%. He has worked himself, he's now at 13%. So you can see he has not focused on going for too much deposit or loans, but he has focused on cleaning what a good banker would do. Clean your book, and then you can scale it. And we're very excited that Gift and Clever, where is Clever? They are together. We believe so much in Uganda that we hired 2 MDs simultaneously and say, you know, you can build a big balance sheet. But they have really done very well. As a result, let's look at their P&L. We see that their funded income is low because we saw they are not lending. Non-funded has gone up by 18%. Yield on assets has declined. Cost has not declined. Margin has eased. But cost-income ratio is down from 74 to 66. And as a result, their profit is up 9%. On constant currency, we all know what has happened to Ugandan currency. On constant currency terms, they would have been up 20%. But as a shareholder, you see return on assets have moved to almost the same level with Kenya, 3.4, and return on equity is at 26, exactly same in Kenya. So we have fully recovered. We think we have fully recovered in Uganda, and now is to accelerate Uganda. It's very good when you have cases of two of your most significant, oldest subsidiary, Kenya and Uganda, taking this, the right shape. And if we go to the next subsidiary, Rwanda, we see Rwanda doing what it has always done very well. Our most efficient subsidiary, customer loans up 18%, deposit up 22%, and you are the second largest bank in the country. And you are growing at that rate. So it replicates what Kenya used to do. You still have a lot of headroom. Your loan deposit ratio, it's at 60. We optimize profit at 85. He has a huge headroom there. And because of performing well, look at his NPL coverage. He has a coverage of 145%. It's a cash-based provisioning base. So that's why he said it's the most efficient. Where is Huntington? Huntington is here. So I'm introducing them. If you want to have a conversation with them, again, we maintain the steady. The P&L of Rwanda, again, we can see it's Rwanda, because of that conflict within the region, its currency has been affected on actual basis, down 13%, but on constant currency, it's at 10%. So we are saying this is situational. We believe, and I really enjoyed that tweet by President Trump that, yeah, we are almost there. And yesterday they added a rider that by 30th of May, they will announce the agreement, the settlement for that region. So we are really looking forward so that the currencies recover, because the challenge is. But look at the cost-income ratio. You are the second largest bank in the country, and you have a cost-income ratio of 38. And that is what we call efficiency. Look at NPLs, 3%. So, and that is why that subsidiary, and we would really love it to continue to grow that way, because it may be small, but punching above its weight because of efficiency. That's the old equity model. Let's continue. I think the biggest celebration, if the table was big enough, we could have Isabella on this table. Isabella, kindly stand. Isabella is the managing director of Tanzania, and we can see what she has done. Thank you very much. Customer deposits are up 9%. Customer loans 9%. Deposit 14%. Coverage, look at her coverage at 171% of NPLs. Her NPLs 3%. Because people talk about the NPL story of equity. It's not the story of equity. It's one country that has given us challenges. Our NPLs are centralized, and I'm glad they are centralized where the head office is. so we can take responsibility. But the experience of turning around and the case we have seen of Tanzania. Look at Isabella, this time last year, her NPLs on what we had segregated as legacy book was at 58%. She has brought that to 21%. The normal book or the new book, she has moved it for NPLs from 2.4 to 2.1. Combined old book and legacy book and new book, she's at 3%. So we have two subsidiaries, Rwanda and Tanzania at 2%, and the fastest growing subsidiaries. They are growing high quality loans. Uganda had stopped lending. It has sorted its NPLs, and we'll see that hopefully by September it will catch up with Rwanda and Tanzania. We saw DRC has no problem, so you all guess where our problem for NPLs are. They're in Kenya. So very good performance in Tanzania, PNL. And as a result of that, I don't want to belabor the story. Interest income 9% up, non-funded 17 up. Cost of funds stable at 4.7, yields up to 13 because she's no longer suspending interest. Net interest margin expanded from 7 to 8, and as a result, her actual profit is up 540%. And if it's on constant currency level, she's up 634. So, and that is really the position. Look at her return on equity. It has moved from 4.7 this time last year to 22.6% to date. And her return on asset, I guess, is the highest at 3.2, breaching 3%. I think Rwanda is a little bit higher. Rwanda is at what, Alex? One slide back. Rwanda is at 20. So the winner is Tanzania, which Tanzania we always thought it was a struggling. Sometimes it requires patience. And if you believe in management capability, management will always deliver. So moving on from Tanzania to South Sudan. Now, we all know we are managing South Sudan as licensed maintenance since 2013 as a country that has really had challenges. You can see customer loans. It's even less than $1 billion. It's 900 million. Deposits, we are lucky. We have 12 billion, but we are not able to lend. We're not able to lend because of the challenges. And as a result, the operating profit would be very low. But this is a country this year, because of oil, stoppage of oil export, inflation went off the roof. Last year, that's when it happened. And we had to register last year a profit of last year 3.1 billion. And you can see the income. The income was very high. Revenue was very high, 3.3 billion. But profit was only 3.1 billion. The cost remained for this year. The situation is different. There is no inflation accounting. That is not operating revenue. So you shouldn't, as an investor, take it into account because there is no cash. It's bookkeeping. So this year there is no bookkeeping. Stable currency. So when you adjust, when you get the total figure, you need, for comparison, you need to adjust for the South Sudan inflation accounting profit for last year. And broadly, if you ignore that, then let's go to the next slide. So let's put these subsidiaries together. We show you subsidiaries because they have different operating environment, very promising environment. The fastest growing country, Tanzania, Rwanda, and Uganda, as you can see, they are all clean, completely clean. And that's why we said the future looks very bright, because they have only one responsibility: to grow. DRC will get out of its challenge and go back to challenging them. It used to be the fastest growing economy in the region, 13%. We hope it will get there sooner than later. So how does the total picture look like? That is the total picture there. When you put the region, you put Kenya, and you compare. So Kenya, as we can see, is now 53% of our deposits, and the subsidiaries are contributing 47%. So essentially 50% of our balance sheet is outside Kenya. So, and we are happy. When it comes to profits, Kenya this time looks very good, 55 to 45. But that change, again, as we said, has a lot to do with the subsidiaries last year had a bigger number from the inflation counting. This is the right level. This really reflects the reality of cash, because you need to look at operating profits that lead sort into cash. So we would say it's 50-50 in terms of growth. If we add that, next slide, Alex, and we see the entire balance sheet, customer loans have gone up to 3%. We all know last year, every quarter, we were between 10 and 18% down. We've pulled our socks, and we have entered a growth phase now. We're not as cautious as we are. Customer deposits up 7%, loans up, and we can see loan to deposit ratio for this quarter have moved up from 58.5 to 60.8 or 61 and 59. And if we go to the next slide, Alex, we then see how is the asset. We talked about where is the challenge. If we look at country level, our problem is in Kenya with NPLs of 19, the highest, followed by Uganda. Kenya has moved from 15 to 19. Uganda has moved from 21 to 13. DRC is stable at 8. And Tanzania from 12 to 3. Rwanda from 5 to 2. South Sudan is still at 0. The second question, we know it is in Kenya. In which sectors? Because that will give you a real depth. And you are looking at the upper graphs, NPL ratio by segment. Our problems is in corporate. And I'm sure, because it's public, you know we have a couple of loans. We're unable to recover. And every time they go to court, then you have to fully recognize that NPL, because you don't know when the judgment is. The good thing, I'm sure you have seen the latest ones. Every time they go to court, we are winning all the cases. We have not lost even a single case. Corporates are secured. Documentation is right. That is why we are winning in court. So it's just a question of time. If it was the other segments, retail, you can see our retail in Kenya is pretty stable. Our private public sector, very stable. SMEs, they are stable. Corporates, yes, it's a pain, but we know it's a timing difference. We'll be able to convert that once we get court judgments. We will be able to realize. And as you can see, this time courts are giving us judgment. It's not the long wait. And I want to really commend Christine. Christine, maybe you need to start. She's really doing quite well. As we all know, she relocated last year to Tanzania. She has sorted Tanzania. We have not told her, come back. Uganda, you have also sorted. Can you say sort home? Christine Brown is Kenyan, so Christine, I'll give you a mic to give the commitment on when you get Kenya sorted out. So broadly, NPLs, yes, they are high, but they are not a cause of alarm to us as management, because we know that it's not across the book. It's a corporate segment. Corporates are secured. Corporate documentation is good, but you follow the process. I'm sure you can see year on year, last year coverage was at 68 or at 67. So despite the growth in NPLs from 13 to 14, we have maintained coverage of NPL. So yes, we want to maintain quality loan book. Despite the fact it's secured, despite the documentation it's recoverable, we want to be prudent and maintain provisions. But it looks very bad. But when you compare to the industry, we're at 14 and the industry is at 17. Alex is the slide that it's at 17. We don't take pride because we don't define ourselves with industry. We define ourselves as equity. Our target is 3. So we have a long way to go, and we are very far from where we would love to be. We have seen coverage. We are keeping approximately 4 billion shillings in total for provisions, and we are confident with the time we should be able to resolve these issues. Let's continue. Then that's the bank, that's the group. Insurance, we should have brought. Insurance is still promising, very promising. We see deposit administration. We are now doing pretty well. We have captured the 3% of the market share, ranking number 6 in the market. Group Life and Group Credit, we are doing well, 7% market share, and doing again number 6. But as you can see, number 14 in gross written policies, 2% of the entire market. Number 2 in Group Credit, 16% market share, and number 7 in return, number 8 in profitability, and number 10 in assets. So insurance business has started on a very good footing. It's not just growing fast, but is pretty rewarding. Revenues are up 43%. Net insurance and investment revenue up 46%. And the balance and P&L are up 27%. Assets, as we have seen, up 13%. So essentially, we're happy with the trend of the insurance. When we look at ratios, reasonably good ratios, whether it's return, whether it's on equity, return on assets, doing better return on asset than the banking group. The banking group is working towards 3. This is working towards 5%. Return on average equity, the bank is working towards 30. We have been able to breach the 40% return, very efficient businesses. So all that we need to do is really to grow. What really excites us is not a profit, is that we have been able to increase inclusion of insurance to incredible level. We have to, in 3 years, that first March was the anniversary of 3 years, but we had 15.3 million policies issued to 6.2. We have issued 2.5 times more policies than the insurance industry. But remember, we are bringing the micro, the small and medium. The old financial inclusion story of equity is playing very, very well And that's why Ajara, you can wave, has earned a seat on the high table. This high table is on performance. And you can be very efficient by like Huntington and Isabella, but we say, what is the volume? It's the size also really matters. So we're very optimistic about the insurance business. And we're happy that we launched this year, January, general insurance. And our first 3 months, we've been able to write premiums of 1.4 billion, revenue of 281 million, and build assets of 2.5 billion in just 1 quarter. So again, the general insurance is following the same path like the life insurance. Alex, the next slide. And so that's something that we are happy about. I'm sure you are all aware we got the in principle approval for the 3rd license, the health insurance. We are more ready with the health insurance business than anything else. Dr. Joan, Dr. Ogora, and Dr. Gatonga, all doctors have been able to, now they have 137 medical centers, so the real supply side is ready, the demand side is ready, the equity insurance is doing pretty well, so we can't wait to operationalize that license. We believe we will operationalize it in readiness for good results next year, but we are still operating because there is a general insurance. So we are on the runway and making good progress. Technology group, we talk about technology. We have 2 licenses for technology group, PSP, Payment Services License, and MVNO. And these have really helped us to digitize, to enhance payments, and that's the story we will see. If Alex, we go to the next slide, and we see how significant the digital channels are. It's because of these 2 licenses. They have enabled us to do what we couldn't do, and more importantly, to integrate third-party infrastructure. But increasingly, as we can see, branches are only handling 1.8% of the transactions. ATMs, 2.8%. Agents who used to be very popular, now people have moved to digital. They no longer need the bridges. So huge structural change in people's behavior. And that is really something we are glad we caught up early because we are able to drive that. So this is a huge enabler. If you really want to look at it specifically, if you look at the fixed cost ATM and branches, number of transactions continue to go down. But look at what is happening to Equitel. Number of transactions are still, Equitel is now 12, 13 years old, but transactions are still going up by 41%. Pay with equity, digital payments now going up by 20%. Internet banking, equity online, 18%. Easy FX, people are now buying online, 16%. And if you see that is also matched by the volume. And businesses are also accepting electronic, particularly internet-based systems. You can see Zebis is coming up. So essentially, we are seeing shift in behavior, adoption of technology, and that helps us. This mapping helps us to then say, what is the trend? How do we prepare for that? Next slide, Alex. And non-banking business. Yes, this is the insurance group and the technology group. They are making good progress. Total assets within the year have moved from 1.4 to 1.8. Revenue from 3.4 to 4.2. Cost and of course, profit from 2.6 to 3.9, and profit before tax from 3.4 to 4.7. Very steady growth. They may look small, but that number is not small. The size of the group is very big. So when they are making that constant progress, we're very excited with the diversification. This is not regional. This is now moving from banking to insurance to technology. It's lines of business being diversified. The other one was geographical diversification. So two things in one moving simultaneously. You diversify in the region and you diversify the lines of business. The power of regional expansion is you are monetizing your brand. You are being successful because of brand. Diversification on lines of business, this one, you are cross-selling. The reason why we are so strong in insurance is because the cost of acquisition is low because it's cross-selling. And so the reason why it's so profitable is because it avoids the cost. It's using infrastructure, existing infrastructure. So this is a business to watch if you are an investor, and its contribution. The good thing, all this is non-funded income. It has no provisions to be made. This is not trading. It's not on balance sheet. It's received revenue. So the more we grow the non-funded, the ambition is to reach 50% of all our revenue by 2027 should be coming from off-balance sheet items, non-funded income. Alex, we continue to do good as we do well. We scale ourselves. The scholars, as we ship wings to fly up to 60,000. Look at the number of women and youth we have trained, 2.5 million. Look at SMEs that we have built and the number of jobs they have been able to create. And social protection and total cost to date is $704 million US. If you multiply that by 130, it tells you the spread that the foundation have been able to sustain, to support, to de-risk, and to capacitate our people. You are training the micro and small. They are tomorrow's large businesses. You are training the medium. They are the leader trailblazers in you include women into business. But what is exciting us most, and that's why we said we believe health insurance will grow faster. To date, by the time this presentation was made, we had 134 medical centers. As we speak, we are 137. Oh, you added another one yesterday. 137. But look at the number of patients. 3.7 million patients. So it's not about clinics, it's the service you are giving. And it's not about service, it's the quality of service, the affordability of service. This is disruption of the health sector so that you can bring affordability, you can bring dignity, and democratize health. Ensure everybody can be able to access health. If there is anything, I'm proud of all the things we do, but our going to health, and I didn't give you a P&L of health. It is under the foundation, it's non-profit making. We didn't go to health, we are not addressing the health of the 3.7 million people to make money. It's because it's the right thing to do. It's empathy. And we always talk about this brand. This is a brand of empathy. And it's a brand with a human face. It's a brand with a human soul. That's really what equity brand is all about. And we celebrate the target we had of planting 35 million trees, we have delivered. Those who know, we took that target when we were celebrating our 35th anniversary. And we said we'll plant 10 trees, how many? 1 million trees for every year that we have existed. We have completed the 35, and we said we will not stop there. We'll now be planting 10 million years, we'll sustain 1 million years, 1 million trees every year, so that we continue to do good if we are doing well. Invest in society. This is all about impact investment. This is about shared prosperity with the society and really enlarging. The last two slides, Alex, is overall group performance. When we combine everything, we see assets up 4%. On constant currency, that would have been at 10%. And we see the growth of assets is being driven by deposits that has gone up 13%. And we see now loans have started growing 7%, and the extra funds are in government security. So broadly, it's a market-led growth, and it means we are connected with the market, and it's the market that is the most promising market in terms of activities in the world. So we hope that these activities will continue to play on our balance sheet, and that then gives us the P&L, and we see interest income is up 7%, net interest expense down 7%, and I really attributed that to Moses, and after a long time, we now have seen net interest income on constant currency going up 10%, 3% on as it is. Non-funded on constant currency 5%, total income on constant currency 7%, 4% down, and then managed our expenses pretty well. Loan loss provision down 44%, staff costs up 11%, other operating expenses because of the transformation. If you look, our fastest growing costs are staff and other transformational cost. And so our profit after tax is down 4% on constant currency. That will be at up 3%. As we said, if you adjust for South Sudan, then you get profit will have gone up by 8%. So broadly, that's where we are. We said we are optimistic about the future, and we can see all the arrows on what matters. The earning assets are green and looking up. We're now able to optimize assets, and so we'll quickly then deal with the NIMs, and then as you can see, the majority of return on assets are up. So that speaks about the prospects that we talked about. Next slide, Alex. And that in absolute numbers, our deposits are up 7% to 1.3 billion. Loans up 3% to 800 billion, and total assets to nearly 1.8 trillion. And if you look at the financial ratios, we very well positioned to unlock the potential we saw. We don't have really potential gap, because if you look at ratios that really count on capital, we are at the highs of 16 and 18, and at the group level, we are at the same level. So capital, if you look at liquidity, we are well positioned, so we'll be able to continue with, and that gives us the confidence, because of the environment, to have a forecast that hopefully can guide shareholders. Very positive that we'll be able to deliver continued good results going into the future. Why? Because the environment is supportive, and we have made ourselves ready. So, Alex, the market has been very generous and kind to us. We have 1.8 trillion assets, but look at market cap, 178 billion. So we're fairly optimistic. So that's the end of the presentation. At this time, we decided to set the questions for ourselves. So allow us to answer a few questions. The first one, of course, was the 4% decline in profit. We said that is because of South Sudan. In our mind, we are up 8%, and on a constant currency, that would be. The issue of DRC, questions is more clarifying. We have seen what DRC is able to do, maintain NPLs at 8.9, up from 8.7 last year, same time. Loan book is still growing at 8% because we want to support, but there is pressure on cost, running a bank under the circumstances. So if Alex, you pick page 10 and 11, we'll see how these are playing in DRC. But we are very happy that we should be able to drive growth in DRC. The second questions we asked ourselves is NPLs. And Alex, if you could support me on page 22 and 21, we're really confident that the NPLs at the business level, they are trading well, very well in Tanzania, very well in Uganda, stable in Uganda, but we have a concentration of NPLs in Kenya, and we all know what that trend is, and we should be able to address that. I think the issue of which we asked ourselves, what is the future of this group? And I think our answer was, this group is very well positioned because of the environment. The region is very rapidly growing. It has the right skills, the right competencies, and is likely then to be able to ensure that there is no potential gap. It will be able to unlock the potential. There is no real gap. We have continued to really improve on people, as you can see, and the ones we are bringing, you can see the impact they are having. But there's one area that we would like maybe to do a little bit of deep dive, lest you miss it, because it is not in numbers, it's in DRC. DRC is bigger than Western Europe. DRC is maybe the same size as the entire of East Africa, minus DRC in geography. And we felt we shouldn't operate DRC the way we operate Kenya, because of the vastness of the geography and low level of infrastructure development. So to unlock DRC fully, we decided government is big because of 130 100+ million people and huge resources. So in addition to Willie joined us from Citibank, where he was for 18 years. He's Congolese. He understands the DRC well. We then went to California and found a vice president of MoneyGram, Hughes Hustad. And we made him deputy MD at head office to bank government. Why did we pick on Hughes? Because the service that the government needs most is payments. In a country with not fully developed infrastructure, what you need is efficient payment. And I'm really glad the government has signed a couple of agreements with him. He dedicates himself to government and state cooperation, and hopefully will unlock that opportunity. The second one was the issue of the South. That is what people call Katanga region, the mining region. We decided to operate that region as a region with its own MD. And Eve, where are you? Maybe you could start. Eve, we got Eve from South Africa. And I'm sure you know why we had to go to South Africa. The second most endowed country in Africa with minerals is South Africa. South Africa has developed its mining, and we said he was with Standard Chartered in South Africa, and we are glad he has settled well, and we have unlocked mining pretty well. Thank you very much. This other opportunity we saw was in Kinshasa. Where is Timo? Timo, what is the population of Kinshasa?
20 million.
Now, that is one city with 20 million. We said this city will be managed independently, and we gave it an MD. He was trained also in South Africa by Standard Chartered, but before that in US, in banking. We said, come home, unlock financial inclusion for 20 million people. You could imagine, and he's showing signs of meeting success, particularly when he combines it with the payments. You can imagine the size of FMCGs in Kinshasa to feed, for instance, to provide kitchen requirements to 20 million people. Bathroom. You can imagine the kind of businesses he can be able to unlock, and the population broad. So that region is being managed independently. Thank you. And then a very seasoned friend of mine, Scott, where are you? Scott, we got to meet with Scott 2015. He was in the leadership of ProCredit, the German bank we first acquired on 2015. He understands the DRC landscape well. He's the managing director of the Eastern region. We felt the Eastern region is very rich in agriculture, artisanal mining. It required somebody who had been in DRC for a long time. And you can see, amazingly, he's still growing despite the conflict on Eastern DRC. So you can have a conversation with him over tea. So essentially, I thought we would bring them. And then we said, this subsidiary need very good bookkeepers. Where is Pia? We then got Pia from Côte d'Ivoire. Was with Shell and said, be the finance director. So that team is to unlock the opportunity. We have cleaned up. Tanzania. Thank you, Isabella. Then we said now is to grow, and I think I'll give you a mic, Prosper. See, Prosper has come in as Chief Commercial officer in Tanzania to grow the business. Introduce yourself. You have a mic there.
Yes, Group CEO, thanks. My name is Prosper Nambaya. Joined Equity last year, September, as a commercial director to support our MD in growing the business. So we are now focusing on the quick wins, on trade finance, transactional banking, etc.
So I gave him the mic to assure you Tanzania will grow. I promised to commit ourselves to make Tanzania count. Tanzania will count. And Prosper has really put very good pipeline in Tanzania. Thank you very much. Bring the mic to this table. And let's have the two MDs in Uganda. Kreba, do you want to go first? Kreba is somewhere there. Yeah.
Thank you so much, Dr. James. Clava Seromaga is my name. I've just joined the Equity Group. It's been 1 month now. I left Tanzania. I was the CEO in CBA Bank in Tanzania. Equity Bank has brought me home. And I'm happy to join now so that we can accelerate the growth in Uganda. Thank you.
Because we have solved the problem of NPL, you can pass it to your colleague.
Thank you, Dr. James. My name is Gift Shoko. I'm the Managing Director for Equity Bank Uganda. I've been with Equity Bank Uganda for 8 months now.
So
and,
that is the turnaround. It has been turned in just 8 months.
Thank you. And previously I was with NCBA Group as Group Director, Regional Business.
Why regional business? You have heard what he said, regional business. Because we think Uganda can orchestrate South Sudan, Kenya, Rwanda, DRC, because we are focused on trade. But also, Equity doesn't want to miss out in Uganda nowhere. So it required 2 strong MDs. What am I saying? Equity is focused on growth. It's purely a growth story. That's what we are really focused on. Thank you very much, Gift. So it's purely a team that will make our licenses count. We don't want to be beyond number 2 in any market. In any market we operate, we have to be number 1 or number 2. Why? We have realized it only counts if you are big. And you can't support African continental free trade area if you are small. Trade volumes are very high. So the strategy, what am I speaking to? I'm speaking about the strategy of Equity so that shareholders would be able to understand. I think, Alex, let's go back to transformation. A little bit on the slide of transformation. I think the second slide, Alex, will be better. And quite a lot of this work has been done. You might have missed it, but we want to say systems and processes were in a good place. Customer, marketplace, we are in a good place. Strategy has solidified. Governance, we have really focused on governance. Now the focus is getting it right on people. And I guess then you have seen the kind of people we are bringing. That explains the 11% growth in cost of staff. It's because we are bringing the right people to provide leadership. We think we have reached a level we have to disrupt ourselves, transform ourselves into Equity that can dominate in the fastest growing region in the world. And the only way we could do that is look at skill. When we wanted to do health, we invited Dr. Joan. In 5 years, she has 37 medical centers because she's a doctor. We invited Dr. Ogora, 3.6 million patients have gone through the MD Ogora. And now, insurance, Dr. Gatonga said insurance. The right people. Equity believes in the right people. Get it right with the people we can. I've introduced to you our strategy team. Our strategy team, oh yes. Bera, are you in the room? Bera is not in. Bera always challenge me. The people you are hiring, are there ladies? Where do you want to raise your hand? Where Anasia has joined us with Charlie Robertson, 2 economists. Why? Because you need to understand those economists. She's in my office as a strategist. I'm sure you all know Joy. Joy, maybe you could start, Group Director of Communication. Christine, who helps me with collecting bad debts. AQ, promoting international trade and bringing global investors. I'm sure we all know Gertrude, our Chief Legal Officer, with John, our capital allocation. They have been added 2 people. And if they can be given a mic, Stephen, do you want to go first? Quickly introduce yourself.
Thank you, Dr. James. My name is Stephen Owio. I joined the group 3 months ago as the finance director. Previously, I spent 14 years in PwC, both in Johannesburg as well as Kenya. And then I spent 3 years with EcoBank in West Africa. And my last stint was 5 years with ABSA based in Johannesburg. Thank you.
Thank you. Now, when you bring big teams, you need a dashboard of finance. What are they producing? So we now have somebody who creates financial dashboards on how businesses are being made. Yeah, Anthony, it looks like the mic has been passed over to you.
Thank you, Dr. James. My name is Anthony Morage. Joined the Equity Group this month. Before then, I spent 25 years at PricewaterhouseCoopers, 10 of them as a partner dealing with financial advisory, strong focus on capital markets, mergers and acquisitions, working across the wider East Africa region, Africa, Middle East, and a bit of Europe. So joining the group to work with the executive management and the subsidiary companies, just around optimizing efficiency, and also supporting our growth agenda that Dr. James has talked about. Thank you.
So Anthony will be the group director, business transformation. 25 years of experience in Pricewaterhouse, 10 of them as a partner in charge of capital markets, financial advisory. So he's going to be the one advising the subsidiary MDs, full-time hired advisor, so that they get it right. So that's how we have positioned ourselves to take advantage of the opportunities. IT, maybe I could have risk. I'm always asked a question about risk and cyber and the rest. We have now revamped Michael Coffey. Maybe you could start. Michael Coffey is the one who has led us in transforming and stabilizing the systems. He has recently been joined by, is it Beth? Where are you? Oh, very good. No, Lena's team. Give the radio on your table the mic. Michelle. Michelle has joined IT. Michelle, quickly introduce yourself.
Thank you, Dr. James, and good morning, everyone. My name is Michelle Kangai, and I have joined the team, particularly looking at the transformation, how we automate, and how we keep our customers central in everything that we're doing. So my background, I'm actually coming in from Standard Chartered. Previously, I was actually looking at internal controls and compliance and risk as well. So I'm very happy to be here. I've been here now 7 months. Thank you.
Thank you, Dr. James, and good morning, everyone. My name is Patrick Inoti. Joined the group 4 months now. Previously, I come from the telco side, spent some time in Safaricom for the longest period, but I've worked in Tanzania as well, in Ethiopia. Glad to be here. Thank you.
Thank you very much. Velma, people want to be assured about cyber.
Good morning. My name is Dalma Kanaka. I've been with the bank for over 3.5 years.
Now, the reason I asked her to start is, even when the country was under huge stress of cyber, we still stood still. We were not denied the service because of, she brings enormous experience, and we are very confident about the security of our systems. Together they have worked together, and now we're almost there, even to protect social customers who are being socio-engineered. So a very strong team. Yeah, you are still studying. You can continue studying. You can then finish the story. I interrupted your story.
No, it's okay.
She's rated the best chief cyber risk officer on the African continent. But compliance, why are you taking the mic away from them? We have Paul Wafula.
Yeah, I'm Paul Wafula, Group Director for Internal Control and Compliance, previously with Standard Chartered Bank in the Middle East and Asia. Yes, so I'm ensuring that we are on top of our regulations and ensuring that we are safe.
Very good. Chief Risk Officer, DRC.
Thank you, Dr. James. Jarasem Jimutengar, Edgar, the Chief Risk Officer of DRC. I come from Central Africa, spent 10 years in Central Bank and 7 years in Development Bank. Thank you.
So what we are saying is that if you look, we have stepped our capability up. We really did a deep search, did a deep dive, and ask ourselves, do we have the right capabilities? I can now look anybody in the face and say, Equity have the right capabilities to take the bank for the next 10 years. It has been a very long exercise, evaluating positions, responsibility, requirement for each, and fitting with the right people to complement the teams that we have had lately. The latest one is building our staff complement. And I will ask maybe the mic to go to the directors in HR. David? A quick introduction.
Good morning, everyone. Name is David Sego. I'm the Group HR Director, and I've been around in the group for the last 3 years. Excited to be joining the team in growing.
So that is the man who have restructured. A little bit about yourself.
Yeah.
You have only been with us 3 years, and you don't look like 43. Where have you been? Life started.
Yeah, I've led HR, before I joined the Equity Group, I led HR functions at FMCGs like Unilever, Coca-Cola in different geographies, but also the African Development Bank and the Airtel Africa. Thank you.
So he brings the knowledge of talent management, and I credit him for hiring that bench. Dr. Ali.
Good morning. My name is Dr. Samuel Kariuki. I'm the Group Director for Talent Management. I've been with Equity from January this year. Prior to that, I have worked in multiple organizations in HR leadership positions, including the MasterCard Foundation, Safaricom, Citibank, Rockefeller Foundation, and many other organizations. Thank you.
Very good. All right.
Good morning, everyone. My name is Karine Mwaba. I'm from the DRC. I joined Equity Group in January together with Dr. Sam. I'm a Group HR Director for Business Partnerships, working in David's office. but I will also be supporting Willie in the transformation journey in the DRC, transforming culture, leadership, and yeah, also supporting all the DMDs in the regions. Thank you.
Have you previous experience?
Yes, I have 20 years almost experience in HR, in various sectors, in the telco sectors, in FMCGs as well. I've worked with Standard Bank before joining Equity, where I was the HR director, for Standard Bank and for Airtel as well. Thank you.
Very good. Victoria?
Good morning. My name is Victoria Chirotich. Joined the group 7 months ago as Group Director, Governance, Strategic HR, and also playing the role of Chief of Staff. It's been an exciting journey. Previously, I was immediate CEO at Image Registrars, where I spent 18 years in different capacities, looking into governance, companies listed at the stock exchange, and also the non-listed entities. Glad to be here.
So that is the team that is thinking through. So it's not a haphazard thing. You prepare adequately, have the experienced persons, and then say, I want a formidable human capital. They set the incentives, they sent everything to attract the right people. But what I discovered is that they also say, how is your performance? So we have been on a performance evaluation, but the most interesting, and I will never forget the support they have given me, he said, an organization can never be better than its culture. Is our culture just words on the walls, or our staff live the culture? I said, why don't you do a deep dive? They did a very deep dive. Do we live our values? Alex, do you want to project the values? Do you live the values? And you know, I didn't know you can measure values, whether people really live their values. So they brought in a measurement called conduct. How do you conduct yourself? And these are the values. They said, do you believe in these philosophies? Do you really live these values? Does your conduct confirm this? And they challenged me and said, James, 3 years ago in DRC, you lost money. We saw you went and managed to get 16 people apprehended, and you got judgment against them. We saw Uganda, some loans, agency, whatever loans, and you went for people, and you managed to get people jailed. We saw in Kenya, payments, payroll, we can help you. So I said, help me. So they did a deep dive on conduct. Do you carry yourself appropriately? And amazingly, they said the easiest one is to see whether people are conflicted with our partners. So they looked at suppliers and looked at those who do procurement. They looked at insurance and those who process, who make claims and those who process claims. They looked at loans, those who receive loans and those who give loans. Is there a compromised relationship? Fortunately enough, we are a bank. We have access. The law is supportive. We should know our customer. We should confirm. And we were shocked that we could see money changing hands between, we didn't know whether it's appreciation, whether it's kickback, hey, it's corruption. We said, but that you have signed this code of conduct. It says you can't. So, yeah, we are going through that. People are taking responsibility to explain themselves. I hope I have told you the whole story. You read it on the front page of one of the dailies. I've now told you what it is. It's a fair process because you can't come here to borrow school fees for your children and somebody asks you, why don't you buy me lunch? You didn't come to buy people lunch. you came to borrow school fees. Micro enterprises can't be asked kickback, not in this bank. This is a corruption-free environment. And so we have become very firm, and we are very excited about what we have been able to achieve. It looks like the future is very bright, with everybody being measured, whether they live the culture. It must be a living culture, not on the walls. It's values that must be lived, and customers must be given services without expectations of rewards and inducements. We have said no, no, no on behalf of the shareholders. Shareholders didn't set this company for people to have toll stations. There's no toll stations going to be allowed in Equity. So we've been very firm, and we'll be very firm. There will be no sacred cow. So that's what we are going through. I haven't answered the question you had in mind. But if I have not answered any of the questions you had for me, we still have 30 minutes. Yes, George.
Let me start with a selfish comment that after you won the City of London, the freedom of the City of London, you are yet
I'm still here.
I mean, you are yet to invite us for a proper party.
I hear you.
You said that the equity moment is really being driven by trade finance as one of the fastest growing sectors. Would you try to describe that a bit? Another question which you can either skip or answer is the Equity ELP program that takes students to Ivy's to Ivy schools in the US. What is the threat to it from the directives from the US president about those universities admitting foreign students? Thank you.
Thank you very much. Great questions, George. There are two slides, and Alex, you can play the slide on cross-border trade. If you look, we now have built capacity to build a wider menu of financial products. It's not just savings and loans. We now said we have Forex. But if we want to do trade, don't borrow. Let's open an LC for you. Let's give a guarantee for you. So we save you interest. You pay just a small commission of 0.25 for the period you want us to give the seller or the buyer those commitments. Those are the trade finance instruments that we are saying. And we are conscious that this is the fastest growing region. When it's a fast growing region, it also has the highest concentration of economic activities. That's what growth is all about. It's capturing economic activity. We said, if this is the hottest region in the world in terms of economic activities, these activities are cross-border activities. How can we intentionally and deliberately support our people to trade more with each other? And because we have systemic banks across the borders in the entire region, we then we need the customer in DRC and the customer in Kenya. We just do across a guarantee that, yeah, you'll be paid if you ship the tools because we have the money. So people don't need to borrow and don't need, it's facilitation. So we see that as the biggest opportunity, and that's why trade finance, we have prioritized it. The second thing is the African Continental Free Trade Area has now been signed up. So we approached the Secretariat and said, can we be your implementing agent? And they were kind enough, and we signed an agreement to be the facilitator. And that is why we have, in the last 2 years, done 36 trade missions, with the latest being last week in Tanzania and Uganda, just to make sure we are promoting. But you don't want to promote without the right tools. So that's why trade finance is it, and we are in support of the African Union and its secretariat, the African Continental. We're also supportive of the payment system, so that we have an African payment system that makes things easy and seamless. About students and the impact. It is true, as we saw, we have Wings to Fly and Erimu Scholar, 60,000. 27,000 have managed to transition to universities. But we have been able to obtain scholarships for 980. Among them, 45 have gone to Harvard University. 218 has gone to Ivy League schools. Last year, we sent 123. This year, we are anticipating to send 150. And the issue is opening more and more opportunities. It's not an announcement, but I'm excited that this week I had dinner with the French ambassador and the European Union ambassador, and said, James, you have really sent a lot of students to US. Can we work together and we make openings for you for Europe? So you can see already we are opening a window for early this year in February. I was in Japan, and the biggest scholarship program in Japan asked us to be recruiting students for them from the African continent. So it's something we chose to diversify. We are concerned about the situation that Harvard has found itself in, and we are concerned. We're concerned about the policies, but at the same time, we have chosen then to diversify to Asia, Southeast Asia, but we are very lucky that Europe has also opened for us so that we could be able to sell. The reason why we focus on this is, like this year, we took 750 of all the students in Kenya who scored an A grade. And then our Wings to Fly kids who had A and A minus. And the 750 are in the bank. And all that we have done, that is to enroll them to training programs for SATs as a training and application to universities. The objective is to ensure the future leadership of all the countries we are operating in. This is not in Kenya, it's in DRC, it's in Uganda, it's in Rwanda. That leadership team of the most talented and most gifted have the best education money can give, and have the best global exposure, but also the best global network. A country can never be better than its leaders. So if we invest heavy, and we chose as way of giving back to society, we build the leaders of the future. So yes, we are concerned about the US, but we have proactively expanded the net. And I'm very, very grateful to the European Union ambassador and his colleague, the French ambassador, for opening Europe for us. Any other question? I'm glad I preempted the questions. Oh, is there anyone before that? Okay, yes. Yes, give her the mic.
Thank you, CEO. My name is Sally Chepkorir, and I'm a shareholder. From the onset, allow me to commend you on this. Allow me to commend you for being the blueprint of the strength of the company and the powerhouse that you are. Allow me as well to appreciate you for sourcing the most brilliant human across the world. I'll go now to my first question. the CPK of Kenya recently opened a critical conversation with Kenyans regarding the future of loan pricing, and that this formula should be fair to both lenders and customers to enhance Kenya's economic future. What's the impact and what's your take home? Thank you.
Thank you very much. As you are aware, we have struggled with loan pricing in this country. In 2016, honorable members of parliament felt that the interest rates were high. They decided to do interest capping, and unfortunately, it didn't work as it was intended. It worked negatively to the economy because the interest capping was done at 13.5, and the government was borrowing at 12.5. So essentially, the banking industry didn't take risk on Kenyans, because NPLs in this country have always been elevated, but there is no NPLs with the government. So the whole industry turned into public sector lending, buying treasury bills, and that has really affected our country in terms of making money available to the citizens. If you look, as we speak today, the total lending to the private sector by the banking industry is about 6 billion. But the total borrowing by government, 6 trillion. But the government total debt is about 11 trillion. So economists call that crowding out the private sector. And of course, that affects growth rate. If you look, Kenya is growing at nearly 5%, but if you look at that growth, substantially is not the private sector, it's growth driven by infrastructure investment by government. And that is why people are saying times are hard. So there is need to have that conversation. And I want to really commend the Central Bank of Kenya for public participation, the regulator, the banking industry, the citizens. And we find a formula that brings, when you look at the formula that exists today, risk-based lending, every bank has its own pricing, risk pricing model. And you get surprised that nearly 40 banks can't see the risk the same way. So there is a case, there is need of, and I commend the central bank for providing leadership to ensure we find a sustainable, lasting solution to the pricing of credit. We need credit to the private sector. The future of this country and its development will be private sector driven. The private sector will not be able to play that role unless it have access to funding for the right tenure or period, at the right price and the right amount, so that we could have. We are excited today reading the newspapers about the possibility of Liloni Mau-Summit Road, and seeing the Social Security Fund coming with 25 billion and owning 50% of that loan. That is the level of kind. I'm excited that alternative financing is coming into this country, alternative mechanisms of financing, but we also need the bank loans for ordinary people. So it's a very good decision that has been made, and I'm very optimistic that it will help the country to fund private sector-driven growth and development. Very good. Yeah.
My name is Ochieng Olo. Think Business. Mine is on Equity Afya. You say that Equity Afya actually is all about you giving back to society. But I'm keen to find out, what is the actual plan? You have 3.7 million patients.
If you multiply that by, say, 500 shillings, which I think is a consultation fee, that's an income of about 2 billion, and that's on consultation fee alone. Now, what actually does Equity Afya generate, and where does it go to? You mentioned that you're thinking of putting, you're thinking of setting up a health insurance, and somewhat that is tied to this. I'm just curious to find out exactly what the plan with Equity Afya is. Is there a plan to eventually make it one of your revenue generating activities in the bank?
Equity Afya, and thank you very much, Law, is about solving a persistent problem in Kenya of health. As we speak today, we know the universal health officers have not been working for the last 1 month. That has significant implications. We wanted to bring an alternative health system that is affordable, it's of the highest quality, and it's accessible. 3 objectives: affordable health, accessible health, and high quality health. We designed these, as I rightly said, and I will repeat again, to ensure this is not being done for profit. So Equity Afya is owned by the non-profit making foundation. Foundation is not a subsidiary of Equity, it's parallel. That's why you can't see the account of the foundation or Equity Afya. Then we decided to do it in a circular economy way. We remembered that out of the 27,000 students who have gone to university, about 1,200 have done medicine. We went to them and said, can we partner you solve this problem? Of course, these are young students. They have just finished universities, so they have not built money. We said, don't worry about money. Choose where you want to set your medical center, and we shall fund you to put up the medical center. They said, but you know, if I said I don't know whether I can manage. We said, don't worry. We'll train you on medical entrepreneurship. So it's a private sector-led medical center. So we trained all of them. We did that through the foundation. We realized they needed more complex training. We enrolled all of them to University of Toronto in Canada. They have been trained severally to ensure they really... Remember, these are the A students, the top A student, like the 700. That's where the doctors are coming from. So quality, we knew we could get it because it's the right person we have invested in. They have been on equity program. They believe in our values. Then they said, standalone clinics may not survive. Then we said, we'll solve that problem. Why don't we register a franchise registered by the foundation called Equity Afya? And then we make each doctor a franchisee. So the clinic is owned by our scholars, those who did medicine. We determine the focus for each of the clinic. We brand them. We build them together with them, fully funded for them by the bank, but on loan basis. And then we agree, because this is support for community, they agreed that consultancy fee will be only 500 shillings. They then said, no, to make it more affordable, every medical center will have satellite and spokes. The satellite will be manned by a clinical officer. A clinical officer will only charge 300. And then the satellite the spoke will be managed by a nurse who, at the lowest level, will charge only 100 shillings for a visit. It's a referral system. So essentially, the foundation then said, we'll set a non-profit company to hold the franchise, and that is what is called Equity Afia, as the company that holds the franchise. Then it took two major responsibilities: centralized procurement, so that the doctors can enjoy economies of scale. So they're able to get drugs at the lowest price because of bulk buying. And the second one, we gave the brand equity to them. And the brand equity brought guarantee that, yeah, this is not just another doctor. This is an equity scholar who has set out to do good to society. He's an A student, so he's an A medical doctor, and is supervised by Equity Afia. And that is where Dr. Ogora, maybe a mic for Dr. Ogora. Dr. Ogora then manages the franchise, manages the centralized procurement. Dr. Ogora is quite experienced.
Yeah, thank you, James, and good morning, investors. Dr. Dennis Ogola. I've been in the healthcare industry for 25 years on the provider side as the group CEO for Avenue Group, and then Evercare Group after that, which was a managing director for Kenya for Evercare Group. So really glad to be here. I've been here for the last year or so, and supporting the franchisees to grow the Equity Afia network, ensure quality, centralized procurement, and we provide affordable and accessible healthcare. We support them in quality, we support them in centralized procurement, as James has said, in the relations with also the payers. Thank you.
So essentially, what then Dr. Ogora do is managing these clinics is centralized procurement. He has provided the all the medical centers with a centralized system. So, and then we have priced everything. The clinics or the medical centers provide on arrival laboratory services. So you can any level 4 kind of laboratory services. Then there is consultancy by the doctor. Each of the medical center has a pharmacy, so they provide drugs. So there is consultation, there is pharmacy, there is test. If you want dental services, they are available, and optical services. For every visit, we have recommended the total cost for consultation, for pharmaceutical commodities, for the lab test, they should not exceed 2,500. So if you compare that with the highest level, then we have subjected Equity Afia franchise to be compared with the rest, and we were very excited that when you combine quality, affordability, and accessibility, we are ranked #1 in the entire country, ahead of any hospital you know in ranking. This last week, we commissioned a survey, and we were shocked that Equity Afia total cost of 2,500 is compared only to medical centers operated by nurses. I'm sure you have gone to any of the big hospitals. We beat them in quality, and you can then compare what you pay and what you could pay, a maximum of 2,500. So essentially is to bring affordability. The clinics are owned by the doctors. It's an economic model there, so that it's scalable and sustainable. And then Equity Afia itself, the franchise owner, is non-profit, so there is no profit to be made there. There is no profit on systems. There is no profit on centralized procurement. It's passed through, and that is why it has been possible. So it's solving society's problem. Have I answered? Very good. And so we are very excited that we could be able to make such a significant. But remember, the essence of equity is to solve society's problem. We solved the problem of financial inclusion. We democratized financial access. We are now democratizing health access, bringing affordability to health, and more importantly, equity in health and reliability, because then it's not subject. Because of our sheer size, we're able to partner with people like Gavi and say, can we do vaccinations for populations for free? World Health Organization, can we do procurement using global capabilities and infrastructure? So there's quite a bit that we could be able to. The objective is to reach 1,000 medical centers. And I'm very excited that we have captured the global attention. I think last week we had a meeting in this room with the Gates Foundation, and the Gates Foundation said, we have seen you are very successful. Can we work with you to scale? So we would like to scale, and I'm very grateful that the Gates Foundation has come in. An anonymous donor also came to us and said, we have seen what you have done. You are going slowly. We want you to do many clinics. Here is money for you to go and do pilot in DRC. We would like to help you set in DRC. So they funded us 5 medical centers in DRC. They are already running. The pilots are there. And here they said, we have not seen you in Tanariva. We have not seen you in Lamu, Mandela. We know why you are not there. Here is money. Set 30 clinics in those remote areas. Now you can see how the blood of equity, the power of the equity blood, it gave us 1.7 billion shillings to set 30 clinics in Kenya and to set clinics in free grant, not for repayment. So you can see how much we can bring health. We all know how committed and focused the Gates Foundation is on health. So if we partner with the Gates Foundation, which I know we shall partner because it's now started, we will be able to disrupt and transform health, not in Kenya, but in the entire region, because that's what they want to do. So there's quite a huge opportunity there. There's a question from Ronak. Please talk a little bit about DRC slow growth. I thought I really answered this question, but let me repeat again. DRC is slightly slowing down on 3 accounts. The first one, DRC is starting to assert itself. So for the last 4 weeks, if I'm not mistaken, DRC has not exported its cobalt. It has said the price is not right. And we are amazed. By asserting itself, the price of cobalt has moved from $22,000 per ton to 35,000 tons. So there's been a little bit of that slack, I think, the last couple of months. The second one, of course, is the uncertainty that was brought by the conflict in the Great Region. Of course, that slows investment decisions. And of course, the Eastern region, we had to close in Goma and Bukavu because you can't operate in conflict. So again, that's road. And that explains the quarter-on-quarter, that deterioration is in that 2 regions of Goma and Bukavu, where we have 4 branches. So it's the 4 branches that are reflecting that tick for on NPLs. Godfrey Cadero from LinkedIn, what strategies have been put forward regarding climate change and what financial products have been developed? Thank you very much. An excellent question. The challenge of climate change is with us, and we can't continue to deny. The most vulnerable of our customer segments is small-scale farmers. We all know how weather has changed, how weather patterns have changed because of climate change, the uncertainty that has brought on production. So it's no longer, we are not dealing with the credit risk with the small-scale farmers, we are dealing with the production risk. And as a result, we said we can't continue to watch as this unveil. And we said we have operated a two-engine model, economic and social. We now have added a third engine, the sustainability engine, a trio engine. Wele is part of it. Lydia, where are you? Lydia is part of it, and it's led by Oscar. Oscar, you can stand. Oscar was the former chief executive of Nairobi Financial Center. We are picking, and we said, leaders in sustainability. He had 16 years in London Stock Exchange, 9 years as the counsel for Cartel Financial Center, and I was happy that when I was chairman of of Vision 2030, we worked very hard to get him back home. I said, I think climate is more urgent. So what have we done? The most important thing is partnerships. We have formed partnerships with experts to help us support the farmers. We have developed 2 financing products, one for sustainability, both for sustainability, one for adaptation, and the other one for, Joy? Yeah, one is
mitigation.
Mitigation. So 2 products, mitigate and adapt. And what we have, those 2 have helped farmers to adopt climate-smart agricultural practices. Last year, we were voted by IFC as the bank with the highest number of loans for mitigation and adaptation to climate change worldwide. And we were celebrated. So it's an area that we have taken huge focus because it's a huge risk to a huge segment of our population and our target customer. The second thing we have done is to say agriculture is important and central. And Brent, our group director of strategy, we tasked him and said, agriculture is equal to the strategy of equity. 70% of the population in the region we operate in are in agriculture. So strategy will only succeed if we succeed in agriculture. And we are very excited that when we challenged him 5 years ago, only 3% of Kenya loan book was in agriculture. Today, 16% of the entire loan book in Kenya is in agriculture because we have to solve that problem. He has gone ahead and is leading the country and ourselves into a livestock sector transformation, developing the product, because livestock also, particularly the pastoralist community, are significantly affected. And also, you all know, we are now going into value addition. The reason why the loan book has grown is because of value addition. And we are picking crop after crop. I'm very excited that the latest crop to be picked is Muranga tea. And the issue is to really like champagne. All of us, I'm sure we know champagne as wine, but champagne is a village. It's like my village county of Muranga. And they blooded their champagne, and it's now the most highly priced. So help production, but also value addition. We hope Muranga will be granted in time GI, identity or identification, geography identification, and we develop Muranga branded tea. Muranga branded tea is Muranga tea is unique. It's the highest altitude tea on earth, grown on volcanic soils, and fully well drained. So it can have a higher premium than any other tea on earth. So we work hard, and I'm very grateful that the French government is helping us to do that, and the process has started. So everything we can be able to do about sustainability. The last one is that to be able to crowd in partners, we are in the last tail phases of membership to the Global Climate Fund, and hope pray that will be, that gives us a huge leeway. We're also working with partners like the biggest one is the UN Agency on Agriculture, IFAD, World Food Program. And we have a partnership in the works that might release $180 million to support climate financing products. And then we have a partnership with Microsoft, ourselves, MasterCard, and who else? Haifa. And this is to bring in our region, we have committed 30 million small-scale farmers being digitized. And I'm glad that the first million is almost digitized, so that you really give them support for efficiency. So there's quite huge and big initiative in terms of climate change, how to position our people, and the appropriate products. The products respond to the... another one from Revi Guti. What factors contribute to year-on-year decline in pre-tax profit for Q1, and what strategies to address? As we said, there are two major factors that has contributed. The first one is currency movement. If you look at on constant currency terms, we should be up 10%. The second factor is last year we had a non-operational inflation profit of 3 billion shillings in South Sudan. If you remove that, we are already at 8% year-on-year growth. So we're very confident we should be able to do. The last one, and we did it really consciously, was to respond quickly to the central bank's rate cutting. There's this debate, how has the bank? I want to remind everybody that we have cut our lending rate by 300 basis points, the highest cutting in the country. So, of course, income has come down faster than we are able to bring costs, because we couldn't bring the cost or deposit down. But that's an investment in our customers. We are known to always invest in our customers. In the course of time, the cost of funding will come down, and we should be able to balance that. We believe by third quarter, we'll surprise ourselves, because interest expense will have come down. So we have brought our income by 300 basis points on the entire portfolio to bring affordability. But we are excited that for the first time in 3 years, we have seen loan growth of 3%. If you remember last year, it was constant, 2-digit decline in a loan book, and now we are 3% up. Yeah. Explain the two MDs in Uganda. Thank you very much. As we said, and these IMDs who are highly competent. Gift, maybe Gift again, you used to be the regional MD for NCBA. NCBA. And would have loved to get an MD from Uganda. But we wanted to change quickly because we were not liking what was happening in Uganda. And you all know we had to create that change. So we got a gift who we had brought in at the group level to help in commercial, and we sent him to Uganda. But we continued to look for an MD for Uganda, and we were very lucky to get Clever to accept to join us. But we later realized when he joined us, they are friends. They have known each other for a long time. So we said, why don't you work together initially and transform Uganda? So we'll see whether they will do. At the moment, what they have shared is GIFT has focused on transforming people, internal control process, and Clever, who is a Ugandan, has focused on commercial, growth of business. But to avoid confusion, although both of them are MDs, GIFT is the MD and Clever is the executive director. So there is no confusion. In equity, titles are titles. They don't count much. They don't count much. You can call me whoever you want to call me. You all call me James. You don't call me CEO. Titles are irrelevant in here. They are only relevant for identification. But for jobs, we know what you are hired to do as an individual. Unless Clever, you have reservations. No reservation. But we truly wanted to have a Ugandan because of the nuances of markets. We need to understand Uganda very well because Uganda is going through a major transition and we want to be in it. And we can't be in it better than having a very senior Ugandan leading us to do what we need to do. So far those are the questions we had received. I thank you most for all the questions. We have exceeded 10 by 16 minutes, but we hope it was worth the investment in time because you have now understood that the future of equity is brighter than the present. But we are proud of our legacy. We hope we'll go back to where we used to do, grow 10 times every 5 years. Looks like the environment can do that with the right people, with the right systems, with the right processes, with the right strategy, and with the right governance. My colleagues, I apologize. We agreed on the questions we anticipated. It looks like they are the only ones. There were no questions for you. Bosses, is there anything you want to add? Nothing. Brent? Nothing. Willis, you pick the mic and say something about the DRC. Half of the questions were on DRC.
No, thank you, Dr. James. I think all has been said. So DRC will remain that place which will drive the change not only for this region, but for the entire Africa. So we believe, we have the right model for us to continue to drive those changes in the DRC, being equity, so the second largest financial institution, but though I believe we are number one, but clearly, it drives, that momentum to really make sure we can continue to sustain the challenges, which I believe are opportunities for us to continue to transform the lives of the people, not only for Congo, but for the rest of Africa. So I think all has been said. Thank you, Dr. James.
Very good. Moses, the story of Kenya is exciting. 50% growth in profitability for the first quarter. What is the big story in Kenya?
Thank you very much, James, and to investors, good morning. The focus was right for us in this Q1 to tackle areas that were quick wins as we still had economic tailwinds coming into Kenya. That led us then to look at efficiency around how we operate as a business, looking at that from how we fund the book, how we price that book, and that's where has been the biggest win. We still have a lot of headroom to really drive efficiency around the operational costs area. But I think the biggest prize, James, as you said, is revamping in growing the loan book in the coming quarters. Thank you.
Thank you very much. Sam, you have been leading us in transformation. What would we expect the new Equity to look like?
Thank you, Dr. James. It's to assure our customers and our investors, and you talked about it, the first phase of system stability has been achieved. I'm sure our customers have enjoyed relatively stable and available products, but the next phase is now more on the customer journeys, digitizing more products, embedding more products that are lifestyle-based. Of course, security remains a very key aspect, and you can't say that you have achieved security as a day-to-day, but also more AI-driven solutions. And I'm very positive about the future. The investment done over the last 2 years are very key in terms of the future. And I'm also very confident that the growth that we have had over the last couple of years is not the same growth that we are going to have. Those growth projections are very positive, with the market's dividend on the demographics, young population, the market growth. And Dr. Mwangi spoke also about the people and skills that has been deployed. So if you combine the three, the investment in technology, what you'd call the tailwinds in the market, and then you add then the technology investments, that would give you then a flavor of how the future, and not even medium term, would look like. Thank you.
Thank you very much. John Kimani via LinkedIn. Thank you for focusing on culture and the steps you are taking. Can we also talk about whistleblowing? And I'm really glad this war will be won. The war of integrity, the war of appropriate code and people living by values will won be when the customers choose to speak out. And I want to encourage customers not to compromise staff because you risk their jobs, because we will have zero tolerance on anybody who is conflicted. So the best you can do if you have a staff is to ensure you never conflict them. But if you find the staff is standing on your way, the best thing is to confine. And we'll be shortly be giving out the toll-free numbers that customers could focus on, so that we ensure nobody should ever be denied a loan without reason, and they should apply. Nobody's loan should ever be delayed. There are nuances like that. Delaying loans, people, So we all need to act together. And I'm really grateful that people have focused on that. I think, Brent, how much of the 150 basis points year-on-year decline in funding cost was due to an increase in CASA? I think this we may not be able to provide that level of details, but because Kato, we have Mukuru, we know you, we'll be able to come back to you. Ben Soitik, is it possible to reduce loan duration from the current to less months? Yes, we can be able to do that with you. And the issue of Kenya, it's from Kato again. Is it not concerning that the profitability of Kenya can be up 50% year-on-year, but group profits are down 8%? I want to say, shareholders, investors, you don't need to be worried about first quarter. As I said, first quarter is because of the investments we are making, is because of the cleanup, like in DRC. The last 3 years, DRC is what has carried the day. It looks like DRC is going through that short stint. We are confident that will be resolved, like all the other situations have been resolved. We're excited. Kenya is on track to get back to where it will be. So I want to assure our investors and shareholders that they will be as happy as we shall be by the end of the year. The transformation we are going through will generate significant value because we can see it. All through, it has been cost. This leadership bench has not started bringing revenue. The IT systems have not started fully being operationalized in terms of efficiency and the rest. So as everything comes into place, and we're investing in the future, we might, the first quarter may not have looked really good. But specifically, it's the decline in profit of South Sudan by 3 billion. Just that one item. Otherwise, we would be at 2-digit growth on profitability. And that is not last year, that was not operational profit. That is inflation accounting profit. So nobody should be really. I want to thank you most sincerely as I return the mic to Alex. We have not had better attendance, and I'm glad it was good when we were going through a strategic retreat with the leadership, and so DRC and the other MDs were here, and we ensured then we were together. You can put a face on the people who are making things happen. Alex, over to you.
Thank you, Dr. Mwangi. We want to thank you for coming and for joining us. The will be available as we leave, but also we've uploaded them online, and we'll continue with the conversations. And any queries or questions that you have, our investor relations team will be responding. Allow me to invite Reverend Evans to close for us, and then we will end up with the equity anthem.
So we shall all stand as I do a closing prayer. Let us pray. Almighty God, our Heavenly Father, we want to thank you so much for the meeting that we have had. We thank you, Lord, for your faithfulness, your provision. We thank you for the victories that you have granted us. And Lord, we are reminded by your word in 1 Thessalonians that we should always give thanks. Heavenly Father, you are our shepherd. How we pray that, Lord, you continue to lead us beside still waters and even green pastures. Guide us in the paths of righteousness for your name's sake. Our prayer is that, Lord, you will open doors no man can shut and remove every obstacle that may hinder our progress. Illuminate our path, revealing divine opportunities and protecting us from error and loss. Lord Almighty, you are Jehovah Jireh, our provider. We trust in your supply. We pray, Lord, that you may continue to bless our leadership, bless our group CEO and the executive management. We pray for the board as it continues to give strategic direction. We want to pray for our investors, the shareholders. We want to pray also for all the partners and even the employees. Father, we pray that you continue to endure us with wisdom so that, Lord, we may continue to enjoy your peace and your blessings. And as we continue this year, we commit our plans to you, our strategies, and even our future endeavors into your hands. We ask that, Lord, you may continue also to enable us be able to grow in our markets. And at the end of the day, may your name be glorified. Lord, we acknowledge that every breath, every idea, and every resource come from you. And so, Lord, we want to refuse to operate in human strength or even chase empty outcomes. So we pray that you sanctify our efforts so that we do not labor in vain. Grant us grace to labor with divine purpose. And Lord, as we live, we pray that, Lord, you shall continue also to give us favor, even that, Lord, we may continue to expand our reach and our influence in all the markets that we operate. May your name be exalted above all. Your purposes prevail in all we do now. In the name of the Father, the Son, and the Holy Spirit. God bless you.
Change for prosperity.